Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. This is Market Today, a show where we'll help you understand the trading setup as well as the market strategies for the day. Remember, the Nifty has declined in the last 4 out of the last 5 trading sessions, but today might be different. The Gift Nifty is already indicating a higher start. We could be opening a gap up of 300 points in trade. Now, why is that? This is because Israel-Iran ceasefire announcement was made by US President Donald Trump in the early hours of today, and that is improving the sentiments across the globe, even in the Asian markets, which will come up on your screens. Across the board, there is a green screen. Remember, the US markets also had opened up, had closed firm in last night's trading session, and of course, after that, this was right ahead of the ceasefire announcement, but this morning we have seen that the US President Donald Trump's announcement coming in as a breath of relief right there. So seems like the worst of upheaval in West Asia seems to be now over in trade. Remember, the Iran attacks in US bases in Qatar were weak in nature and seemingly intentionally weak in nature, and after that this development has really come in. And although both the nations are yet to talk about the ceasefire agreement at this point in time, Trump announced a complete and total ceasefire between Israel and Iran and is signaling a potential end to the 2-week conflict in West Asia. Remember, US President said that the agreement would begin around midnight on Tuesday, with Iran initiating a 12-hour ceasefire followed by Israel. If successful, a full cessation of hostilities will be formalized by Wednesday night. Meanwhile, equity markets in Asia, if you see across the screen, is all green. Remember, the US markets, like I pointed out, overnight ended in the green, and now the Asian markets are also opening high. You can see almost a 2% uptick on Hang Seng Index, a percent higher for the Nikkei. Kospi is up by 2.8%, and the Gift Nifty is now indicating a start above 25,255. That's over a percent higher in trade as well. So sentiments improving across the board. With that, we've also seen a sharp fall in the crude oil prices, almost a 10 to 12% of a dip from yesterday's close. We are now seeing that the Brent crude is hovering around $68 a barrel. WTI crude is around $65 a barrel as well. Gold prices have declined more than a percent to $3,357 an ounce amid the easing geopolitical warfare that we had been seeing, and a concern on that account too. Apart from that, silver prices were down 0.6% as well. Crude oil, WTI futures had also plunged by about 3.4% to $66 a barrel too. So that's the impact that this ceasefire is leading to. What we are given to understand is today might be a much better day. We will also keep an eye out on the broader market, since they have been outperforming, and seeing how some of the impact can actually be seen. Now, of course, we will be also waiting by to welcome our top guests to help us understand how the markets will be now reacting to this ceasefire. What is the strategy that you need to adopt now? We have with us Mr. Dharmesh Kant, who's joining in, our expert of the day. Mr. Kant, warm welcome. Thank you so much for taking the time out for this special edition. Meeting in good times now. Finally, 2 weeks of a conflict seems like coming to an end, with US President Donald Trump's announcement coming to fore. The initial reactions are already being seen in the commodity space, oil as well as gold prices. The stock markets in India are seemingly going to be opening higher. But how would you really, probably read between the fine lines and understand what has come to fore over the last 12 hours?
Yeah, good morning, Sakshi, and good morning to all our viewers. Thank you so much for inviting me for the show. See, for the last 2 weeks, whenever we have interacted, I have always maintained that this is a buy market. Any decline should be bought into, and you should be positioned on the long side. Sector and stocks are things which needs to be mindful of when you are taking a long position. Uh, Having said that, and this ceasefire coming in, if you look at the, last 3 or 4 years of the world history, whichever war has taken place, be it Russia, Ukraine, or Indo-Pak, or Israel, Hamas and the Palestine thing, and now Israel, Iran, and US, Iran. It has been a very bilateral kind of a localized setup where, specific targets were targeted and there was no escalation further of it. One good point about it has been the country which has been impacted by the aggressors a very meek kind of a response was there. It's more of a self-defense and a crying kind of a response. And all have been just, sending a message that end this war, we want a ceasefire. Even the Ukraine is pleading the same. Same happened with Pakistan, when they asked for the ceasefire with India. And now you are seeing Iran and other countries involved who are asking for a truce and the ceasefire. Symbolic responses were there, but they were symbolic in nature. This is what markets want. This is what the economic activity was looking forward to. That it's more of a localized kind of a thing. When people, you see blood on the street or a death on the street, sentimentally it's very unsettling. But and that clocks your mind for the economic analysis, and that's what we call the noise in the market. So thankfully the market was bought on every declines. Even Friday the market opened deep down, but it did not end the way it opened up. So that is the texture of the market. And now, since I think all the issues related to localized kind of a warfare or targeted kind of a war has been put to rest, it will be back to business, normal economics. And now the headline which we all would be looking forward to is the July 9 kind of a deadline on the tariff thing, how
Absolutely.
this is getting settled. So that is where we are standing, and the sectors remain the same. Only thing is, I see some profit taking in the defense sector post all this, settling of issues out there. Otherwise, economy facing all the sectors are likely to be bottom to.
Absolutely. Just a point on the oil prices and gold prices, and then we can move forward to understanding our strategies. Just briefly mentioning the opening in the pre-open trade for the Nifty 25,171. You can actually see a 200 point of an uptick on the Nifty. So we are starting above 25,100 is what is being indicated by the pre-open trade. We'll come back to it, but a little bit, understanding of how would you expect the commodities to fare from here. In the last 2 weeks, again, there was a consistent uptick. Just in the last 2 weeks, we had actually seen oil prices jump by about 15% odd or so. And, the gold prices had also been inching higher. How would you expect them to trade? Of course, today is like a sharp downturn as a knee-jerk reaction. How do you see the course of commodities?
So, Sakshi, when you are speaking about commodity, we have to segregate into three baskets. One is the base metal and the commodities which are used for industrial production. Second is the bullions where gold and silver come into play. And third is the energy where oil is into the offing. So while I consistently maintained that initially when the initial jerk was there, it was more of a knee-jerk kind of a reaction when it moved from 64 to $80 a barrel, and nothing beyond that was itself symbolic of the fact that things will be settling down very fast. So while to my mind is in a bear market of its own, you will have a bear market that kind of bounce and rallies in between. But structurally, the way the energy shift is happening to the renewable side, oil doesn't have a greater future out there. So that is settled. And today you can have a bump up in the OMCs and all, but it's a trade for which may last for a couple of days and nothing beyond that. So that chapter seems settled. Gold, I think one can take a bit of a profit out here, but it's likely to be bought into any declines because the tariff thing is still to settle down, and that is what is will keep the gold prices in the bull market of its own, and it's likely to prevail for one more year. That is my reading on the gold asset class. Coming to metals in the entire commodity basket. So, Sakshi, if you look at last 2 to 3 years, where the inflation was at its peak in the year 2022-3, and then it started cooling off. And from 24 onwards, September month onwards, all the central banks have been cutting interest rate. So US has cut 100 basis point, UK has cut 100 basis point, ECB has cut 200 basis point, and now India is also joined by cutting 100 basis point kind of interest rate cut. Still, inflation is down. And none of the base metal basket picked up because there was a general slowdown in the economy. So that is one basket where I think the monetary policy stimulus which has been given across the globe will now start playing in. And it's a time to look into metal basket as a buying opportunity from say 9 months or 1 year kind of a trajectory. And the top picks you are there, you divide it between ferrous and non-ferrous, like Hindalco and the two top picks from the Indian basket.
Okay, got that. So metal space is something that you're watching at. Let me now come to the point that you made, that all eyes would now shift from the geopolitical concerns to the July 9 deadline of the reciprocal tariffs. Because of this, the markets were facing a lot of uncertainty, facing a lot of volatility right from April, from the time Donald Trump took power, because this is one of the first decisions that he announced across the globe, that he is going to raise the reciprocal tariffs against all the countries that they trade with and where they feel they are being treated unequally. Now the point is, with India there is no sign of any kind of an agreement being reached as yet. Only two nations have had their first phase of agreement being made. One is UK, the other one is China. India, there are no signs. What are the reports saying? These are unconfirmed reports, but some of them indicate that the US bilateral trade agreements are actually hitting sticky patch. US is insistent on lower duty for agricultural as well as for dairy produce and access for even GM crops. That India is unwilling to allow GM crops or a broad access for American dairy or agricultural products because we want to protect our farmers. Now, India and US are still both keen on signing an interim deal before July 9 is what we are given to understand, but we will have to wait to find out as to how things take form and shape. Your suggestion, Dharmeshji, as far as the tariff talk is concerned, is it going to be a big concern to watch out for, and should one really form all their strategies basis what will really be a come out of this agreement? Because remember, we had also discussed this. There was a phrase, taco, Trump always chickens out, that was being talked about when this initial phase of tariff talk was concerned, because he talks big but ultimately it's all negotiatory. What should we be prepared for as India is concerned?
Actually, as far as India is concerned, the only bone of contention is the agri and the dairy part. Other than that, I mean, balance looks to more to be settled out there. So this is out there. I mean, this has not been settled, and if Trump wants to have more time and wants to negotiate further, then there can be some disruption on the China plus one kind of a story. So wherever Indian companies who are benefiting from China plus one, and like for example, if you are supplying renewable energy segment or you are supplier of mobile phones or related allied technology kind of products to the US, that can come into point of contention, and he can revert back to 25% kind of a tariff. So that is one area which is a gray area as of now and a matter of concern. So the advice would be to stay away from such companies from a trading perspective till this tariff issue is settled. And there are many, many, companies out there who have actually benefited from China plus one kind of a theory. And most of them are equipment makers, intermediate equipment makers, and eventually being supplying their products to the US. So that will definitely be in a problem. But let's see, the other aspect which I am watching very closely is anyways from July to September quarter, you will see the real impact of tariffs playing out. At least 10% kind of an inflationary impact is already there. How much of it will be inflation in nature depends upon whether corporates take it into their books or they pass out onto the consumers, and the ratio between them. So our assessment is around 50 basis point to 60 basis point can go into the inflation, being the size of imports which are there into US. And the balance around 100 basis point can be hit on the corporate profitability. I mean, for the US companies who have been importing to sell their products. So, and some part of it will be to exporters as well. So that is how things are placed. But to my mind, all these are totally discounted into the price. So, I mean, the stock prices have corrected significantly. There has been both a price correction as well as a time correction. From September onwards, we have not retraced any highs. So, 9 month kind of a consolidation has already happened into the market. So, other sectors which, I mean, till this US tariff thing settles with India, are there for the open, like BFSI is a clean play where you can have your bets, be it public sector bank, private sector bank, or NBFCs. You can go and buy metals. You can go and buy which are domestic centric kind of companies, infra companies for Indian I mean, which caters to Indian economy, you can buy out there. So there are plenty of plays. So segregate between them. On overall index, I think it's gradually inching higher.
Fair point. The markets have settled in the pre-open trade, 208 points higher at 25,179. That's what you see on the Nifty. All the sectors could actually be opening higher in trade today, including PSU banks, realty, IT, broader markets, oil and gas. Those could be in focus clearly. We have some stocks that could be opening higher: Sriram Finance, Asian Paints, IndusInd Bank, BEL. These are some stocks that could be opening in the positive zone. Of course, we will be keeping an eye out on the entire oil and gas pack. Dharmeshi, how about oil and gas? How are you looking at this part of the commodities right now and amidst these fresh developments?
See, oil and gas, to my mind, is a sunset sector for me. Going forward, incrementally, volume growth is hardly, I mean, it's very difficult for volume growth to come by. And for the pricing, you may be gaining. So, I mean, when the oil was jumping up, people are buying ONGC and Oil India, and now with this kind of a correction, it becomes a sell on rally kind of event. Same is with the refiners. Gradually, if you see the thorough put and everything, it's not being going the way it used to go, say, 5 years or 7 years back. So I'll be completely avoiding that. Only the gas companies, for example, say MGL, IGL, looks to a good buy from a structural perspective. But again, there the caveat and the factor which all often comes into play is the government intervention on the gas allocation and the pricing of gas, and tweaking out there 10%, 5% means a lot for these companies for their profitability. So volume wise, I mean, you can predict the volume growth for these companies, but it's difficult to predict the kind of profit they would eventually earn because of the government intervention. So again, it becomes a trade, and I mean, technicals matter more here than fundamentals. So the entire space, we keep it as a void.
Okay, avoid on the oil and gas space. What about the IT sector, sir? How are you looking at that one? That's an important one to discuss again, because again, after the geopolitical tensions with this tariff trigger coming into fore, IT will again be in focus. How are you looking at that, sir?
So IT has been into focus for last 2, 3 years, and because that every time it is a hope which is playing out. The next guidance and commentary by the management really positive. Point number one. Point number two is actually being positive in the subsequent quarter when you see the traction building up. But what we have observed for last 3 years, apart from two consistent quarters, third quarter is always a dampener for the IT companies. Things have not been picking up. Initially, it was AI which was, being a culprit. Now, since Indian IT companies are equipping themselves with AI products, so maybe that may not be the culprit going forward. But BFSI spend is one thing which people are looking forward to, whether that picks up or not. Because 33 to 34% of all big IT companies, be it Infosys, TCS or Steel Tech, they get their revenues from the BFSI spend, which till now has not shown any signs of improvement. If you look at Accenture numbers, what they have done, they have revised the lower end of the guidance upward, not the
Yes.
upper end.
Yes.
And normally, this is a phenomena when you go towards the year end because you know very precisely where your revenues are ending up. So, no revision on the upper end of the guidance. As far as new deals, there has been a slowdown out there. So, I mean, it can be a currency related trading plays happening because they are cash rich companies, good cash flows in place. Apart from that, I don't see IT companies as structural buy. To my mind, I mean, this year is washout for IT companies. Those tariffs will be there, Sakshi. It will be higher than 10, 11%, which is prevailing as
Yes.
of now, or at
Exactly.
best 10%. So that will have its own set of drawdown on Indian IT companies. So 9 more months to go. Having said that, one more thing is very clear. I mean, it's in a no man's land with a consolidation phase. You don't have a meaningful downside as well as a meaningful upside for IT companies. It's just a trading place. I mean, if you see a 4%, 3% kind of a down days, you can buy it and be luckier getting up 4, 5%. That's it for all the major IT companies out there, which are into software as a service or software as a platform kind of services.
Okay, what about pharma, sir? Because maybe even if we finalize the tariffs on some of the sectors, pharma, remember, has been already talked about, will be as an outside, will be treated separately. And probably Donald Trump has also indicated that pharma tariffs are coming soon. They will be something that we have never seen before. And so far, pharma sector attracts zero tariffs. So any tariff will be a negative for us. How are you looking at pharma?
Sakshi, this is a very trickier basket for even for Mr. Donald Trump because you can increase the prices of consumption, food and all, but medicines, if
Yes.
you increase the price out in US, it can have a serious repercussion. I think Mr. Trump is aware of that. So he has been making noises around that, but nothing substantial has happened. And I don't think anything substantial will come through because you need cheap medicines because somebody is ill. He needs a medicine. How can you raise the price of those medicines out there? Unless you have an in-house capacity, which is being, getting the business is not there because of the cheaper imports coming into the country. So that is not a scenario as of now. At least 2 years or 3 years it will take for US if they want to manufacture out there, which again I don't think is going to happen. And most of the Indian pharma companies are basically generic player or API or contract manufacturing kind of a player, which anyways is outside the ambit of the tariff policy which Mr. Trump is targeting at. So I think that's a safer play. I mean, it can give you some volatility and a heart attack kind of a thing in between on the statements or tweets being made by US president. But eventually, those dips will are likely to be bought into. So pharma is one spot where you are not looking at larger kind of a returns because valuations are not cheap anymore. But if you are looking kind of a high margin of safety with some lower alpha on that, so that is one sector you can be into. And the top stocks, to my mind, is maybe Arvindo Pharma and the Cipla and Sagum Chance.
Okay. We have the first tick on the markets. Let's go to the markets now. 25,168, almost 196 points higher in trade on the Nifty. Seems like all the sectors are opening in the green with PSU banks, real estate, small caps, IT also leading. India VIX is down by 4% at 13.3 odd levels. That also reflects the kind of confidence that the markets is brimming towards. 1.7% higher for PSU banks. That's the top moving sector. Real estate follows 1.2% higher. IT 1.2% up. You have both the small and the mid caps also over 1% higher in trade as well. Let's look at the Nifty Bank, about 1% higher. You can see a strong move across the board. Private banks almost up 1% as well. Financial services almost up 1% as well. On the Nifty, top movers are Sri Ram Finance, Asian Paints, IndusInd Bank, BEL, Tata Consultancy Limited. You also have Hindalco as something that's been moving up. Only two stocks on the Nifty are in the red right now, viewers. ONGC and NTPC. Look at the markets, 266 points higher, 25,239. We are further pulling up in momentum at this point in time. Broader, even the PSU stocks, they're all up 0.4% higher in trade. FNO stocks, you have Union Bank of India, Adani Ports and HPCL as those that are gaining ground in trade. Let's look at the Nifty 500 basket as well. Strong moves across the board here too. You can see many stocks that are buzzing in trade in this space as well. Are there some that I could be marking for you? We'll wait it a bit and then we will probably come out with the names that we usually discuss. Okay, cement names are now buzzing. Ultratech Cement is picking up some more pace, coming up strong. Adani Ports is now up 4.4% higher in trade. I think Adani stocks is something that we need to focus on as well, which we will discuss with Dharmeshi. But let me quickly get Arpit Beriwal, Analyst Derivatives, Wealth Management and Motilal Oswal Financial Services also joining in on the program. Arpit, good morning and warm welcome to you on Business Today Television. Help me understand with your first take on the markets. Long time since we actually saw a 262 point of an uptick right at the open. How would you look at it?
Very good morning to all. So, as rightly mentioned, we have seen finally some good opening across the indices, Nifty, Bank Nifty, and the broader market. So, first talking about Nifty as a whole, if we talk about Nifty from last 6 months, got stuck in a range between 24,700 to 25,222 levels, and we were talking about 25,200 as a major level. Shift can be seen post closing about 25,200 levels, and today we have seen a opening near 25,200. So, going forward, I think now for the expiry point of view that we have on Thursday. 25,000 is likely to be a major support that will likely to act as a major support going forward, and now 25,200 this level is very much crucial for initial 1 hour. If you're able to sustain this level around 25,200 levels, definitely can see a momentum towards 25,350 and then positionally 25,500 levels. When talking about Bank Nifty, so Bank Nifty was relatively outperforming. Yesterday, in spite of gap down opening, we saw good recovery from the lower levels, and today we have seen a gap up opening above 56,500 levels. So next target is the previous all-time high, that is around 57,000, 57,100. So relatively, Bank Nifty is outperforming with major support around 56,000. On the immediate basis, 56,250 would be the major support for Bank Nifty going forward.
Okay, got that. We will come to your top ideas, Arpit, but let me come to Dharmeshji. Dharmeshji, I think Adani Group stocks, that's something that we must discuss as well. Remember, today is the 33rd AGM of the group as well. At 10:30, we will see the group chairman, Mr. Gautam Adani, also address, the AGM and the shareholders at large as well. So that will be another key watch for all the investors of Adani Group and shareholders as well that you must watch out for. The AGM will begin at 10:30 a.m. Whereas Adani Ports AGM will start at 12:30 p.m. So that's something that you should be, of course, keep in mind. Dharmeshji, how have you been looking at the Adani Group stocks? Any triggers or, key points that you're looking at from the AGM to be announced?
I think AGM is likely to be big announcements, as has been the nature of Adani Group when it comes to AGMs. So, but apart from that, if you are looking at the business, I think cement is looking pretty attractive. Basically, the Ambuja cement, which has underperformed the cement basket. If you compare this to say Ultratech, the largest player in the basket, so there is an opportunity, a buying opportunity out there. So that looks pretty well. Adani Ports having corrected form, I mean, that's a very stable kind of a business which this company is having with a consistent compounder on earnings. So that business is looking very good. And the third, I mean, basket which is looking to better to me is the Adani Green Energy Limited. So promoters have converted their warrant at 1,400 rupees a share. So that is far higher than 150% higher than the current valuation at which the stocks were trading by 40%, around 50%. So that speaks about the confidence of the promoter into the business. And anyways, renewable energy is highly in demand and in business going forward. So these are the three companies which look pretty attractive to me. There will be announcements regarding new hydrogen kind of energy, what kind of investments they are making, and other new age energy sectors. So those are, I mean, headline announcements. But business wise, fundamentally, I think Ambuja Cements, Adani Port, and Adani Green Energy Limited can be looked into because the pricing and valuation seems attractive to me.
Okay, got that. Arpit, top stock ideas, first 5 minutes done. What would you go big with?
So if you see, there would be a lot of shift post the ease of geopolitical tensions, and definitely we can see crude-related beneficiaries. So first would be, as it has been a top pick within the aviation pack, that would be Indigo. So if we see from positionally also Indigo monthly time frame, it is clear uptrend from last couple of months. Yes, couple of days back we saw some cooler from the higher levels due to ongoing geopolitical tension, but now it has again seen a gap up opening, and then going forward also 5,800, 6,000. So positionally, 5,800, 6,000 is on the cards for Indigo, and we are quite optimistic. And looking at all the time frame analysis, the setup is very strong, and definitely can see new life high territories. Second would be from the heavyweight pack, that is Bharti HL. So if you talk about Bharti as a whole, it has been a secular outperforming counter within the entire market. Classical range breakout on the monthly and the weekly scale, a weekly scale a consolidation pole and flag breakout above 1,900 levels, and I think slowly steadily we can see 2,050, 2,100 on the cards going forward for next couple of weeks, 2 months time. So I think Bharti Airtel and Indigo, this would be a top picks so far. And looking at the market perspective, definitely there are a lot of pockets, but we can see a couple of ideas as of now, and we'll see how the market progresses going forward.
Okay, Bharti Airtel and Indigo. Indigo today is also up by 3.6%. We'll keep an eye out on both these stocks that Arpit has chosen. We will also speak about a few other pockets as well with Dharmeshji. But Dharmeshji, your sense on Indigo, and would you expect further upside from the current levels? Is this a good entry point for those who still don't have the stock in portfolio?
Yeah, definitely. If you are an investor from a long-term perspective, definitely it's a good entry point because I mean they will compound at around 17 to 18% going forward for next 3 4 years, and that is the fleet sizes will increase by more than 10% every year, and at the same time new destination and new locations are being opened. That is the domestic destination as well as the international destination. And crude prices, I mean, it has been set at, it's constituted 45 to 50% of the entire operating cost. And with the fall in the crude prices which is happening, it's likely to shift lower, and which is very, margin accretive as well as profitability accretive for the company. And at this point of time, it's more of a duopoly kind of a business which is happening in India, and the other airlines, Air India, is having its own set of issues and problem, and a lot of restructuring overall has to be there. The direct beneficiary of that would be Indigo Airlines. So whichever way you look at it, I mean, it's a good fundamental buy, and they have been, profitable business since long. But the only caveat is you need to be an investor for say 2 to 3 years. Then easily you can get 45 to 50% kind of a return from the current price levels.
Okay, got that. Now, Dharmeshji also wanted to discuss with you the banks and the financial space, and Arpit will be coming to you also on this space later on. So, Dharmeshji, help us understand today PSU banks that are rallying, and of course, finally moving up the ladder, trying to come back and into focus again, 2% higher for this one. Is this an encouraging sign for the PSU banking space to come back into flavor, or would you still be more comfortable with the large cap private sector banks?
Yeah, I mean, strangely, for the last 1 year, PSU banks have did everything right. I mean, they have ticked all the boxes, be it the advances growth, which was, I mean, last quarter was better than the private sector peers. So most of the PSU banks delivered 11 12% kind of advances growth, where private sector banking space lagged the same. At the same time, asset quality, every bank, whichever bank you look at, it's very, very strong going forward. And net NPA is less than 0.5% on an average basis out there, and they have a good CD ratio, credit deposit ratio also in favor of PSU banks, unlike some of the private sector banks which have utilized it far higher. Still, any rallies in PSU banks are sold into. So I think the market is still not very comfortable with the aggression which private sector banking space shows when it comes to getting new businesses with the PSU banks. But to my mind, I mean, times have changed. The things are have actually changed on the ground level. If you look at, and they're going forward, the next leg of the new high when the market makes, I think PSU banks will outperform private sector banks from current price points. So there, again, the topic remains, Bank of India, Bank of Baroda, from the public sector banking space. And if you want to, hedge it or balance it out, then Federal Bank and Axis Bank from the private sector banking space, so one can pick up. And if you are playing with this basket of four, so by Diwali, most likely market would be at new highs, and that
Okay.
time these would better delta returns.
Okay, got that. Since we're talking about the banks and the financial services space, there's this IPO that's going to be coming in tomorrow, and that's HDB Financial that everybody has been anticipating. Dharmeshji, this 12,500 crores IPO, the largest in the NBFC space as an IPO that we have seen. First subsidiary of HDFC Bank. So far, we were only used to of the HDFC Group stocks being listed. Now we have an HDFC Bank subsidiary coming in. How are you looking at the prospects? What are you reading into for investors? Is it an IPO that everybody must be applying for?
We are coming out with the IPO note today. It will be released, and it's a subscribe rating on this IPO. And for the listing gains, right now we are playing it only for the listing gains and not a positional buy and hold kind of investment out there.
Okay.
And the reason for that is the price point at which it is coming. So if you look at unlisted market space, when this IPO was, the pricing was there, it's almost 50% discount to that.
Yes.
So that entry itself gives you a good buying opportunity. But again, same happened with Tata Technologies. I mean, before IPO, it was trading at around 1400, 1300 kind of a price point, and IPO price was lower. Initially, there was a listing gain kind of scenario, then it fizzled out. So we will have a look. I mean, a lot of things are happening into the NBFC space. A lot of regulations are coming, and RBI is trying to regulate them more firmly. So all these factors will play out. But definitely, it looks like a subscribe from the listing gain point of view, just because of the price point at which it is coming.
Okay, got that. Arpit, how about you? Banking financial space.
So actually, if you have to see this sector as into the three categories. First would be the private bank space, second would be the NBFCs, and third would be the PSU bank. So if
Yeah.
you look at the private bank space, particularly, we have been quite gung-ho about this because generally these are the sectors or the stocks that relatively outperform, and we have couple of ideas within the each sector. So first, talking about the private bank space, if you look at the chart structure of Kotak Mahindra Bank, so slowly, steadily, when the stock corrected in last couple of weeks from 2300 to 2000, we have seen again good recovery from the lower levels towards 2200 levels. So I think going forward, in looking at the monthly and the weekly time structure, the stock is in clear uptrend. It gave a consolidation breakout in the March series and it retested its previous breakout zone. I think so slowly, steadily, we can see a good move towards 2300, 2400 from next 2 to 3 months perspective. Kotak Mahindra would be within the private bank. Second, from the NBFCs, our favorite counter that is Bajaj Finance. So if you look at the chart structure of Bajaj Finance, if you see from last almost 3 to 4 months, slowly, steadily the counter is moving higher. So in last couple of days, we have the stock has corrected from 980 to 920 levels post its corporate action, and on the daily scale, negative the formation of lower highs after 6 to 7 sessions, forming strong bullish candle, and definitely you can see a four-digit figure going forward. So I think from the NBFC space, Bajaj Finance will be a top pick, and within the private bank space, Kotak Mahindra. Now talking about the PSU space. So if you see this sector overall is consolidating. So there are selective pockets that are relatively outperforming, but overall the sector of the index has got stuck in a range. And within that, I think Indian Bank is one of the huge outperformer. If we see the chart structure of Indian Bank on the monthly scale, clear uptrend from last 3 months, trading at life high territories. On the weekly scale, it is consolidating. However, on the daily scale, it is given a range breakout. So I think slowly, steadily, we can see good momentum in Indian Bank towards 660, 670 levels with major support around 600 levels. So I think these three counters will be on radar within the financial and the banking space.
Okay, got that. Dharmesh ji, last question to you before we let you go. Auto space, and how would you look at Tata Motors? There is the Harrier EV and the introductory prices that have been announced there, starting 21.49 lakh rupees. Fortunes again coming back to the focus as far as Tata Motors is concerned. Do you think these are encouraging signs?
Yes, actually, if you look at Tata Motors, all the negatives which should have been there, I think they have been announced and they are discounted into the price. The tariff impact, I mean, management has clearly said that they would be cash flow dilutive and they would be ending this year with zero kind of a cash flow kind of a position out there. And having said that, now you are looking forward to an event where commercial vehicle business and the passenger vehicle business would be split. That demerger is going to happen. Having all that in regard in mind, I mean, going forward, the SOTP based valuation of Tata Motors, which was for us 1400 before this tariff thing happened. Now with tariff issue into place, we have revised it down to 1100 kind of a level. Still offers a meaningful upside from where Tata Motors is trading. So going forward incrementally, I think positive news flows and positive events, which are, the EPS accretive kind of a thing is likely to play for Tata Motors. So to my mind, it's a good buy at around 650 to 80 kind of levels. And one should be looking forward to, if you are holder from a year's perspective, 1100 kind of a target price for Tata Motors.
Okay, got that. Thank you so much, Dharmesh ji, for being with us on the
Thank you so
program
much,
and
sir.
helping us with all your insights. Appreciate your time, sir. Thank you so much. All right, viewers, what we'll do is we'll continue our conversation with Arpit now. 25,200 as far as the Nifty is concerned, 0.9% higher, holding up pretty strong. Arpit, the first 15 minutes candle is formed. What exactly would you read into the markets? Where are we going after 25,200 is now with us?
So actually, if we talk about, as we discussed also, if we talk about the chart of last 15th May till now, it's almost been more than 28 sessions, and Nifty was finding a hurdle near 25,200 levels. So today we have seen a gap up opening, and the good part is that selective heavyweights are holding along with the banking space. So definitely the auto pack, selective energy, banking are holding. So NBFC stocks are holding. So 25,200 as we discussed about, it's a major level, and good part is that from last 15 to 20 minutes it's holding at that levels, but the important part is at closing. So as per the closing basis, if we see a closing basis above the today's end session 25,200, definitely we can see more momentum towards 25,350, 25,500 levels. On the immediate basis, I think the immediate support would be around 25,100 levels. Until it holds about 25,100 levels, our bias would be positive towards 25,300, 25,350 levels.
Okay, but with today's high of 25 to 50 that we've hit, remember the Nifty's also hit the 2025 high. This is the highest level for the Nifty in this new calendar year that we have actually seen. Remember, the erstwhile high of 26,277 was seen in the previous calendar year. So finally, we have a new high for the year. How long before we actually go back to the historical highs now, Arpit?
So actually, if we see the bigger time frame structure from where the real rally started way back in 2020, so last 3 to 4 years was a secular uptrend that we have seen in the market, and last 6 to 8 months was kind of a bigger trend where we have seen the bear market, where we have seen good correction, and our sense is that 2025 would be more of a consolidation year, and that's what we have clearly seen. The index corrected from 26,000 to 22,000 levels, and now again slowly steady the index is climbing near 25,000. So definitely our optimism says that probably by the end of July or by mid of August we can see 26,000 levels on the cards, but the key level is 25,200 that we all have been tracking and observing. So I think slowly steadily we can head back towards 26,000, 26,200, where somewhere between mid August.
Okay, fair point. So that's the viewpoint there. Before we came back to the markets with Dharmeshji, we were talking about the auto space, and I wanted to take your view as well on the auto pack as well. Are you an EV fan? Would you be looking at Tata Harrier EV for yourself?
So actually, if you see, I have a different stance to here. If you see overall from the price action perspective, Tata Motors is definitely one of the bigger players or bigger market share players over here. But if you look at the chart setup wise within the auto pack and to play the EV theme parallelly, M&M, if we see somewhere the stock has relatively outperformed, where the auto index corrected almost 25 to 30% in last 6 to 7 months, and we have seen some good recovery from the low levels. M&M is trading at life high territories, and if we see the monthly chart of M&M from last 12 months, the stock is trading in a band between 2600 to 3200, and I sense is that as soon as we see good recovery in the auto counters going forward, M&M is likely to lead, and definitely we can see 3500, 3600 levels going from next 2 to 3 months perspective. So M&M would be a more giving more preference as compared to Tata Motors in comparison of the auto pack. Now coming to Tata Motors, if we talk about, definitely it's a kind of a counter that has formed a base formation near 620, 630 levels, and on the monthly and the weekly setup it is consolidating. So I think the extreme pain point has been done for this counter. Slowly, steadily in next couple of months time, we can see this counter to move towards 750, 800 levels going forward.
Okay, got that. I hope this has also helped all our viewers out, get a perspective there. Let me just come back to the markets, read a bit of the momentum that is in focus right now. Within the PSU stocks, you have railway stocks now that are buzzing in trade, RVNL, IRCTC, that's up in trade. I think the entire pack seems to be throwing in some names here. Are you confident of this railway rally continuing for the better, momentum sustaining for the better? Is this a space that is interesting you, Arpit, at all?
If we talk about the sector specific, railway as a theme that top out last almost July 2024. In fact, if I remember, June 2024 was a top out theme for the sector, and post that it has entered a corrective phase. So definitely some bounce back move have been seen from the lower levels. But if we see a very selective movement has been seen with these counters, and these counters are more of a kind of a trading or a bounce back because if we see the bigger time structure, the stocks are still in pressure. So I think we will better wait for this sector to settle down, because there are better opportunities in other sectors. So I think more of a trading perspective, if you want to play it out, that's a different story. But from a secular uptrend kind of sector, we'll wait and watch, and we'll wait for some better entry point going forward if we look if we see that there are better entry risk reward setups.
Okay, got that. Let me just read up a few names from the broader markets that are buzzing in trade. That's something that we will discuss now with Arpit in terms of mid and small caps and even the Nifty 500 stocks. Within Nifty 500, you have Chamanlal Setia Exports that's up in trade. You have names like JM Financial that's also buzzing. Swan Energy is another one that is in focus. You have names like Servotech Renewable Power again in focus as well. Remember, this stock was in focus when Elon Musk was in town. This company was in was the company that brought Elon Musk to India. That was in focus too. Let's talk about the mid and the small caps. I think after hitting the day's high, there is some profit booking on these spaces, but they are still up about 0.6, 0.7% each. It's the oil marketing companies that are up. HPCL is up 4%. You have names even like Vodafone that are inching higher, 3% higher now. You have steel authority, some metal names that are also buzzing in trade within the mid cap basket. Within the small caps also, let's see what's buzzing in trade. And Aarti Industries is up 4.5%. Action Construction is up. Inox Wind, HPL Engineering. You have KFin Technologies that's up. Reliance Power is up. All of these stocks that are buzzing. Anything that interests you particularly, Arpit, within the mid and the small caps, broadest index maybe?
Sakshi, if we see definitely in last couple of minutes, we have seen some cool off. And if we see the beauty of the market, where from last couple of days, the stocks that were really hitting highs, today we have seen some cool off in that sector and we've seen sector rotation, a very quick sector rotation. So I think going forward also, the sector rotation is likely to continue. And if we see the overall reality pack, so post the announcement of RBI, the surprise announcement, the cut of CRR and definitely repo rate. So reality sector as a whole has relatively outperformed. So if you see, if in spite market corrected, but selective counters are holding its gains. So if you talk about the chart structure of macro tech developer, that is LODA. A classical uptrend counter on the monthly scale from last almost 3 to 4 months. Weekly scale it is consolidating, but the base of the counter shifted higher from 1350 to 1420, 1440 levels. And I think this is a counter to watch out for. Slowly, steadily, the stock can head towards 1560, 1600 levels. So I think one counter that attracts over here is LODA. Slowly, steadily, you can see a good momentum towards 1560, 1800, 1600 levels. Second would be from the motor space, that is the auto space itself, TVS Motor. So if we see the chart structure of TVS Motor, where the Heroes and Bajaj are almost 25-30% down from his life high trajectories, TVS Motor is somewhere trading in a life high trajectories. So on the weekly scale, from last almost 8 to 9 weeks, the stock has been trading in a range between 2700 to 2850. But definitely it has shown resilience in spite of market corrective move, and I think this counter has to be on watch within the auto pack. As we discussed, M&M, and second would be a TVS Motor that is likely to outperform going forward, and slowly steadily we can see good momentum towards 2950, 3000 plus levels going forward. So I think these two counters will be on radar going forward.
Okay, fair point. So we'll definitely keep all these stocks in radar. I wanted to discuss the chemical basket with you, Arpit. Many of these stocks are also coming back in momentum. Why am I discussing this? Remember, we are looking at these geopolitical tensions now finally easing, and Iran also exports a lot of chemicals to us. How would you really look at the chemical basket particularly?
So, Sakshi, if you see overall the chemical and the fertilizer space as a whole, if you see, definitely there have been a varied and a vague momentum across all the counters. So, certain counters have really outperformed, whereas certain stocks have really underperformed. So, if you talk about overall, first from the chemical and fertilizer space, if you look at the chart structure of SRF, if you see overall the chart structure of SRF, a classical uptrend on the monthly scale, retest of breakout around 3000, 2800 levels, a strong bullish candle, and now turning back from its support zone. So SRF, if you look at the chart structure wise, definitely we can see a good momentum towards new life high trades towards 3200, 3300 levels. So this counter is there on radar. Second would be from the chemical and fertilizer would be Deepak fertilizer. Nitrate. So Deepak fertilizers, my bad. So if you see the chart structure of Deepak fertilizers, a classical uptrend on the monthly and the weekly setup, forming higher lows from last almost 4 months. Weekly scale also is consolidating, holding above its 20 DEMA. So I think slowly steadily you can see good momentum towards 1650, 1700 plus levels. So I think these two counters would be there. That would be quite bullish on looking at the technical price setup.
Okay, got that. So that's the chemicals basket for you. Okay, let me just throw in some names here, where Arpit can give us his views. Geo Financial is something that I wanted to discuss with you. 300 right now, 2.5% higher. What's the outlook on Geo Financial that you have?
So actually, if we see where we have seen the bottom out in the mid-April 2025, Geo also corrected from almost 330, 350 to almost 200 levels. And then from there on, we have seen a vertical slowly, steadily rally from 210 to almost 300 levels. So now if you look at the monthly setup wise, immediate basis 3111, 311 is a major hurdle level for this counter. And post that we can see momentum towards 340, 350 levels. So if we see the bigger time structure, definitely the stock is in uptrend, and immediate hurdle is around 3112, 3113 levels. Post that we can see good momentum towards 340, 350. So the setup overall positive would be with major support of 280. Our stance would be positive for next couple of weeks to months time.
Fair point. With the oil prices finally cooling off, all the three OMCs are buzzing in trade: HPCL, IOC, BPCL. Is that a space that you're watching out for too?
If we talk about the OMCs, generally the nature of the OMC has been quite erratic, and it's more of a news driven, and sensitivity is quite high. So chart wise, if we see within the all three setups, HPCL is a counter where we can relatively place a bets on, because it's a secular uptrend counter on the monthly scale, trading near life high territories. So today we have seen a gap up on the immediate basis. 423 is the major hurdle zone. Fresh momentum can be seen towards 423. So if someone wants to initiate a position, one can initiate with keeping stop loss of 400 levels for 425 levels. Post that, closing above 425 can see could move towards to 450, 460 levels. So HPCL would be a preferred pick within the OMC pack.
Okay, got that. We'll keep that in mind too. Okay. So PSU banks, realty and auto space, infra, these are the sectors that are buzzing in trade with over 1% moves that can be seen across the board. Stocks as well, which we have discussed already. Let me just pull up some more stocks. Within the PSU space, let's discuss a few more stocks. Power space, PFC, REC, our erstwhile favorites are coming back. How are you looking at that, Arpit?
So actually, if you see the overall structure of REC PFC, more or less the stock has been in a consolidation phase from last almost 7 to 8 weeks. If I look at the chart structure, almost from last 3 months, from last 16 weeks, REC is trading in a band between 360 to 420 levels. So if we see from a medium term perspective, the stock has definitely formed bottom, but as of now, there is no major momentum that has been created. So if you want to play the range between 390 to 420 levels, definitely you can play within this counter REC. Now talking about overall chart structure of PFC. PFC also has a similar kind of structure on the weekly scale. From last almost 15 to 20 weeks, the stock is trading in a band. And I think major supply zone is around 430 to 435 levels. So I think within a band, we can play this counter, but still definitely a positive sign would be around above 435 level closing. Till that time, it would be more of a consolidative counter that you can play upon.
Okay, fair point. I hope this has given you some sense as well. But let me talk about the index contributors. The top contributors on the Nifty are HDFC Bank, which is contributing nearly 28 points, L&T, Reliance, ICICI Bank, M&M and SBI. Let's talk about HDFC Bank. Again, we were discussing with Dharmesh on HDB Financial Services. That's the key big trigger that everybody's watching out for. The IPO opens tomorrow. Of course, the shareholders will get an additional quota to apply from, and therefore there could be higher chances. What about HDFC Bank at the current levels? How are you looking at the stock?
You have to understand, overall this counter has been relatively in a range bound counter, but the bigger term of the counter is positive. So if I look at the chart from monthly scale, a range breakout was seen in the series of March series above 1900 levels, and slowly steadily the counter is moving higher. But however, if we see the overall last 8 to 9 weeks, it has been trading in a range between 1900 to on the upper band 1995. And look at the chart setup wise, this is kind of a investment based stock where you can hold it for a couple of months to weeks or 2 years time. So the trend of the stock is positive. Support has been shifted from 1700 to 1840, 1850 levels, and positionally till resistance holds above 1850 levels. Slowly, steadily, we can see move towards 2100, 2200, but that view would be for next 3 to 6 months time frame. Overall, would be positive in this counter.
Arpit?
Sakshi, So as we discussed with the HDFC Bank, so definitely we would be positive in this counter, and going forward also we can see move towards 2100, 2200 going forward. So our buys would be overall positive for HDFC Bank.
Arpit, I wanted to actually ask you on the FMCG stocks. Can you hear me now? Yeah.
Yeah.
So the thing is that we wanted to discuss that this has been a laggard space. But are there any signs of any reversal coming in on the FMCG pack as well?
Looking at the overall chart structure of FMCG from last 1 year, where it top out in September 2024, it has been a huge laggard in last couple of weeks to months time. And if we
Yeah.
see the stocks also, definitely there has been no major thrust in the counters, up bearing few counters, that is the breweries or selective consumer facing companies. So if you look at the chart structure of relatively from the FMCG pack, one counter that is on radar would be Tata Consumer. So this counter where the index has corrected sharply, this counter is still trading at just couple of percentage low from its lifetime high territories. Though right now it's in consolidated phase, but I think the structure of this counter is positive, and definitely going forward for next 1 to 2 years perspective also, we can see good upside move towards 1300, 1500 levels. So one counter would be Tata Consumer that we are positive on. Second would be from the brewery space, that is United Spirits. Though the counter has corrected in last couple of weeks from higher levels, but I think this counter, the bigger trend of the counter is still positive, and any dip towards 1350, 1300 levels on this counter United Spirits definitely would be a very good buy from a long term 1 to 2 years perspective. So Tata Consumer and United Spirits would be the counters to watch out for within the FMCG and the consumer space.
Okay, got that. Let us also discuss the defense space. Remember, this has been one space that has been on our radar every day almost. We have talked about it and the momentum. Today, look at the stocks within the defense pack. 2.2% lower for the index. Most of the stocks that were on a sharp upward momentum are seeing 3, 4, 5% kind of a dip today. BDL is in front of you. You can also look at GRSE from the shipbuilder space, Astra Microwave, Paras Defense, look at HAL, BEL, look at Mazagon Dock, also look at, a whole host of stocks, Mishra Dhatu Nigam, all of these stocks. Look at Garden Reach, it's now 5.5% lower in trade. We have to discuss this. Remember, the scaling back and the ceasefire talk that is now in focus is now creating some kind of a pressure again. How would you look at the defense names amidst these dips now, Arpit?
Sakshi, for a sector, so generally what you have seen in last couple of years time frame, generally whenever the sector is in uptrend, the best way is to create a basket for the sector and buy on dips kind of strategy would work with, in which you buy 4 to 5 counters within the sector of equal value, equal allocation, and then you hold it for 6 months to 1 year perspective. Because generally such counters on the daily time frame basis is very difficult to time it. But if we see the bigger structure, the sector is in still uptrend, and from a 1 year to 2 years perspective, definitely there is still more upside on the sector as a whole. So I think it would be a buy and dip sector, and within this we can generate a basket of 4 to 5 counters. Like we can create a basket of 4 to 5 counters including stocks such as Mazdog, BDL, GRAC, BL, and equally allocate them and buy in like 2 to 3 stands for next couple of months time. Because I think from next 1 to 2 years perspective, still definitely we can see good upside going forward. So overall, the sector would be on buy on dips. Definitely some cool off is seen from higher levels due to easing out on geopolitical tension. But I think the bigger frame is still positive, and we can definitely add on dips going forward.
Okay, got that. Well, Arpit, we will thank you then on that note for being with us on the program and sharing with us all your views across the space that we have discussed today. 25,160, we are seeing some signs of profit booking right after hitting that 2025 high. Let's see how it goes forward. We will continue to mark out for you how the market is moving, and throughout the course of the session, you can hear a lot of top market experts guiding you through the markets. In case you have some questions about the stocks in your portfolio, ask them with the top market experts on daily calls at 12 noon. I'll be back with that.
India today is right now at the port city Haifa, and this is the area which is the most important economic hub of